My guest today on the spot is a seasoned commodities analyst and the author of The Gold Cartel, a book which claims that central banks have secretly manipulated the price of gold in an effort to calm financial markets. The author uses quantitative analysis of historic gold market patterns to make his point. Joining me today is Dimitri Shpek. Thanks for being with us, Dimitri.
Hello, thank you for the invitation. I really appreciate it.
What's interesting, Dimitri, is your book came out last October, but the topic of gold manipulation has resurfaced yet again thanks to Professor Rosa Metz, who plans to release a study which examines how the LBMA twice gold fixing is apparently rigged. What do you think about this study? I know that Rosa Metz was in contact with you.
Regarding the gold fix, the first study that I did was already in 2002 with intraday data, minute by minute. At that time, I also mentioned for the first time the fix, the PM fix, that there's something irregular, but it appeared more pronounced only later. And now I think the LIBOR scandal opened the public much more for the possibility of manipulations in any markets, let it be gold, silver, currencies. And the fixing is, of course, as a benchmark, a key goal for anybody who wants to manipulate the market.
So, Dimitri, what inspired you to write this book?
It was mathematics, statistics. My background is that I developed trading systems, and I recognized in the years 2000, 2001, first statistic that something is wrong in the gold market. I developed some algorithm and then I did my own statistics. So this is the background. I simply wanted to figure out what's going on here in this market.
And what did you find, Dimitri? Are the 5 banks and now 4 banks, since Deutsche Bank exited the LBMA gold fix process, or did you find that there is rigging happening?
Oh, the 5 banks are doing the gold fixings, but they are not necessarily behind any manipulation that occurs during the fixing. This can be everybody, who is dealing over the fixing, but it can also be, for instance, in the COMEX market to influence through the COMEX market the gold price, also at the fixing. So I personally don't know who is behind the gold fixing manipulation. Of course, I have some guess. The study itself, what I did, shows simply it's an average. I make the average of many price returns minute by minute, and it's clearly visible that during the time of the fixing, the PM fixing mainly, the price drops a little bit. Also at the AM fixing, gold has 2 fixings. And by the way, also at the silver fixing, there's also a drop.
Now, Dimitri, when I speak to traders regarding the fact that there could be manipulation between the LBMA price fixing, they basically say they don't really care, that it's almost irrelevant today. What do you think of this?
There's still a lot of trade. There are still some further contracts which are based on the fixing. So with the fixing, you have a bigger influence. And what I want to point out also here, because I also read that some people are saying that's a normal behavior of the fixing, that during the fixing process, the price drops. It is not the case in the 80s and in the 90s. So I checked the data from 86, which is the earliest minute by minute data that I could get for the spot market. And this pattern appeared later. So there is something. There's something wrong with the fixing.
And Dimitri, what have you done with your findings? Did you ever bring them to a higher authority?
I wrote some emails to the American authorities, yes.
And what was the response?
I got a kind reply that I got the email.
Okay, well, based on this, Dimitri, what do you think is really the fair value of gold?
In my opinion, it's difficult to say that there is a real value of gold, because gold is just a store of wealth, a liquid store of wealth. And through this influence of the price, many investors simply say, I don't want to be in this market. Gold is always also a political price. It's ruled somehow by the central banks who are leasing gold or who are selling gold. So we cannot really say this is the right price for gold, in my opinion.
So, Dimitri, if you feel and firmly believe there is manipulation, yet you still invest in the market.
The manipulation is nothing which can avoid that gold will rise significantly, in my opinion. We are, in my opinion, in the first correction of this big bull market which started in 2001, and it will, let it be now, let it be in 1 year, it will continue to rise for a few further years. That's my opinion, and it's of course connected with the problems of the financial situation of the world. I mean, the world is indebted a lot compared to GDP. The figures are quite high, not only in US, but also in Europe, Japan, and even China. And I think gold, a store of value, which is not credit-based, can benefit only from the situation.
Now that's interesting, Dimitri, because most people would argue that gold is being manipulated downwards, yet you're saying it could still rally.
Gold is mainly manipulated down in almost all cases. I found only one case where gold was manipulated up, and this was in May 2001. Yeah, and all other cases, in my opinion, it was manipulated down. But you can see there is a gold bull market now since 2001. So the manipulation, gold rises despite the manipulation. So there is no reason not to buy gold because of manipulation.
Dimitri, do you think that manipulation occurs in other markets?
It's also visible in silver. Yes, I could recognize the same anomaly, the same pattern for the silver fixing, which is at another time than the gold fixing. So it's an independent manipulation. It's not just because silver and gold are correlated. And I haven't done any research for other commodities.
All right, Dimitri, thank you for joining us from Munich today.
Thank you very much, too.
And thanks for watching On The Spot. You can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Camboning. Thanks for watching.